up to 9.65% distribution yield on a preferred equity fund. Is PFFA the best preferred ETF on the market right now? Hello everyone and welcome back to Markets with Marcus. So, we've been talking a lot about preferred stocks lately here at Diamond NestEgg. Why they may offer attractive yields, how you can find and buy individual preferreds on Fidelity and Schwab, and when it may make sense to buy individual preferreds versus preferred equity funds. Because building and managing a portfolio of preferreds requires a bit of time and effort. For our VIP Investment Club members, you can find all our preferred stock investing videos in the member zone, under member videos here. Just scroll down to the section labeled Preferred Stock Mini-Series to find what you're looking for. Tomorrow, you will also find here the next member episode in the mini-series on the top 6 preferred equity funds on the market right now. For today though, let's dive a bit deeper into just one of the 6 preferred ETFs in that member video. This preferred ETF comes up a lot in our discussions because it shows a trailing 12 months distribution yield of 9.65% on Morningstar as per May 29, 2026. The Virtus InfraCap US Preferred Stock ETF, ticker PFFA. So, with that in mind, here are the 3 topics that we'll be covering today. 1. What is PFFA and how has it achieved its performance numbers? 2. What is PFFA's historical track record? And 3. Who should or should not invest in PFFA? Let's get started. What is PFFA and how has it achieved its performance numbers? Let's start with a quick look at the 2 firms that are the namesakes of PFFA. The Virtus InfraCap US Preferred Stock ETF. Virtus Investment Partners is the primary sponsor and distributor of PFFA. They essentially provide the platform for PFFA and also spearhead marketing and distribution or sales. Virtus is based in Hartford, Connecticut, was established in 1995, went public in 2008 and has about 800 employees. They are a multi-boutique firm, meaning they will sponsor many different themes and ideas, and they have grown to about $150 billion in assets under management. A separate firm, InfraCap, or Infrastructure Capital Partners with its full name, is the sub-advisor, as the industry calls it. They were founded in 2012 in New York and are a smaller firm with maybe 15 employees. InfraCap selects the stocks and manages the portfolio and strategy for PFFA on a daily basis. So, Virtus InfraCap US Preferred Stock ETF, ticker PFFA. It has $2.4 billion in total assets, which makes it a top 6 among funds that invest in fixed coupon preferreds, although just barely. And please note that all numbers in this video are as per May 29, 2026, unless otherwise noted. PFFA is actively managed. Now, the InfraCap part of its name might lead you to expect that Infrastructure Capital Partners, as the sub-advisor, would build an infrastructure-focused portfolio for PFFA, but that's not the case. In fact, PFFA has quite a wide investment mandate. They focus on income and do so with an active management that does not seem to impose too many restrictions. As they say, security selection and weightings are based on a variety of quantitative, qualitative, and relative valuation factors, whatever that may mean. And we'll get back to the 3rd point about the enhanced exposure, the leverage, in a moment. The net result at the end of the 1st quarter of 2026 was a portfolio dominated by financials, mortgage REITs, and other real estate. These 3 sectors together accounted for 70% of the fund. Industrials, Communications services and utilities, as the next largest sectors, were all in the mid-single digits. PFFA charges expenses of 2.11% or 211 basis points per year. Now, that's not cheap, even for an actively managed ETF. But do keep in mind that the total return and distribution numbers that we'll be showing you later in the next section of this video already deduct the expense ratios you see here in this table. So the 2.11% in isolation shouldn't be the only factor when you make a decision about PFFA. What really counts is your net return after expenses, what actually arrives in your account. PFFA was established in 2018 and its price was $21.36 per share on May 29th. But back to the enhanced exposure. As the fact sheet states, modest leverage, typically 20 to 30%, is utilized to help enhance portfolio beta and current income. But what does this modest leverage mean, right? So, we added up all 192 positions that PFFA held on May 29, 2026, which got us to this rounded $3.1 billion in gross total assets here, which is clearly more than the $2.4 billion in total assets for PFFA that I showed you before. And please do note that the yellow lines are our own insertions into the spreadsheet from the Virtus website. The answer lies in the cash equivalent line here. It tells us that PFFA had a negative cash position of about $673 million, meaning their net indebtedness from loans or other lending arrangements was that high. So, in other words, you could say that $673 million of these $3.1 billion in gross assets belonged to the creditors, and only the remaining net position was really what investors in PFFA owned, which gets us to these $2.4 billion here, the total asset number from before. So, in other words, PFFA's management is betting that holding this larger portfolio of $3.1 billion will earn the fund so much more that it can easily pay the interest on the loans and still have some extra money left for the shareholders. That's leverage in a nutshell. When everything goes well, it may enhance returns to investors in the good years. But it can also multiply losses in the bad years, because the interest on the $673 million in debt will need to be paid, regardless of how the markets are doing, and even if the preferred dividends were to stop flowing. This gives PFFA a pretty unique risk profile relative to most other large preferred funds, which do not leverage their investments as far as we can tell. And for our VIP Investment Club members, please do note that PFFA is the only preferred ETF on our list of top 6 that does utilize leverage, from what we can see. And if you're interested in joining our daily member conversations, whether about preferreds, corporates, munis, and other higher yielding investment opportunities, come on over and check out our VIP Investment Club. Visit our website at www.diamondnestegg.com and click on this yellow Private VIP Investment Club button to learn more. You can also find all the links below this video for easy reference. For this video, let's keep going with PFFA and see how its leverage, the bet on extra debt, has worked out for the ETF in the past. What is PFFA's historical track record? Let's have a look at trailing total returns first. What an investor would have gotten on an annualized basis from both distributions as well as share price movements, meaning dividends plus capital gains or losses. So, if you had bought PFFA 1 year ago, your trailing total return would have been 14.93% per May 29, 2026, which is quite impressive, even though not representative for the longer run. Had you bought PFFA 5 years ago, your trailing total return would have been lower, at 6.86% on average per year. Not bad, but clearly less than the 1-year trailing total. We can't go further back, as PFFA was launched in 2008 and has yet to complete its first decade on the market. Now, important as it is typically to understand the total return of an investment, most investors wouldn't buy preferred equity for long-term growth. In fact, since its launch, PFFA's share price is down about 14%, although it's been quite stable at a bit above $20 for the last 3 years or so since COVID ended, as you can see here. Remember that the price of preferred shares does not necessarily reflect underlying growth in the issuing companies, but will instead more typically fluctuate with interest rates, basically like bonds. Most investors would usually buy preferred equity for the income, for the generally predictable and higher payouts. So let's see how PFFA fares here and take a look at its trailing 12 months distribution yield. It's TTM, as measured by Morningstar. This is basically what an investor would have received in actual cash payouts, dividends, over the past 12 months, as a percentage of the share price at the end of the observation period. And here we see the number that we mentioned already and that has piqued so much interest in PFFA, the 9.65% TTM. And to underline the point about generally predictable and high payouts, Virtus published this table here in what they call the enhanced fact sheet. It shows that since July 2018, PFFA has been paying monthly dividends in a tight range between 15 and 17 cents per share, even through the ups and downs of COVID. The only exception was one smaller payout of 12.495 cents in December 2019. And before you ask, the payouts in April and May 2026 were 17.25 cents per share as well, the latest available numbers at the time of this taping. Now, as some of our Diamond NestEgg members and regulars may remember, one of the potential advantages of preferred equity is that dividends may be considered qualified dividends by the IRS, in which case they might be taxed at the usually lower long-term capital gains tax rates and not at the full marginal income tax rates that apply to both non-qualified dividends and interest payments. That's this column here, the percent of qualified dividends. And this is where things get a bit fuzzy for PFFA, so to speak. Whereas all the other preferred funds we've analyzed for our preferred stock mini-series so far were fairly transparent about the percent of qualified dividends, we couldn't find an official percentage on Virtus' website, which is quite unusual. So we've put our best estimate of 50% here based on the market intelligence we had. But do leave a comment below for me, Jen, and everyone else if you own PFFA already and got a 1099 from them for 2025, stating what this percentage of qualified dividends was. Do note though that the treatment of qualified dividends on preferreds is not automatic. A preferred investor, as well as the preferred issuer, may need to meet certain conditions, as set by the IRS. Please also remember that Diamond NestEgg is not a tax advisor. Always consult with your trusted tax advisor for your personal situation. And, of course, any potential tax advantage doesn't matter if you hold PFFA in a tax-advantaged account, such as a 401k or IRA. Keep in mind that past performance is not indicative of future results or outcomes. And this is particularly true for preferred shares, whose dividends are not guaranteed in any shape or form and can be reduced or completely suspended at the discretion of the issuer. Again, VIP members, please revisit our previous videos on preferred stock here in the member zone if you need a refresher. And let's move on now to the next part of today's video. Who should or should not invest in PFFA? As we've seen, PFFA showed an impressive trailing 12 months distribution yield of 9.65% per May 29, 2026. This is significantly ahead of iShares Preferred and Income Securities ETF, PFF, which, as the undisputed market leader by size and history, is the benchmark all other preferred funds have to measure themselves against. PFF's corresponding TTM distribution yield was only 5.54%. And it's not just the cash distributions. PFFA's average total trailing return over the past 5 years of 6.86% was, if anything, even further ahead of PFF's 1.69%. Assuming that you do want to dip your toes into preferred equity ETFs, you will still ultimately need to decide for yourself whether PFFA may be the right fit for you, or whether you might prefer the larger, more established, and more conservative PFF, or perhaps another preferred fund altogether that's somewhere between the two. As we told our VIP members in our upcoming video on the 6 top preferred equity ETFs on the market, just as preferreds come in many different flavors, preferred funds also come in many different flavors. And you need to choose what's right for your individual circumstances, goals, and expectations. But back to PFFA for now. It's always more risk for more return in finance. And personally, we think that you should only consider PFFA as a potential investment if you can answer yes to all 5 of these questions. 1. Are you comfortable with the leverage that PFFA uses? As we've already discussed, extra debt can amplify the upside in good times, but it will also amplify the downside if the markets hit a rough patch. 2. Do you like and trust the teams at Virtus and InfraCap who manage PFFA? The fund is actively managed and its mandate is quite wide, so the decisions of the portfolio managers will be key to PFFA's future performance, none of which is guaranteed, of course. 3. Are you concerned about the smaller size of PFFA and the potential impact this may have on liquidity if you were to try to sell at an inopportune time? iShares PFF, for instance, is more than 5 times bigger than PFFA in terms of assets. 4. Do you consider the expense ratio of 2.11% for PFFA as a showstopper? Now, the expenses are already deducted from all the historical performance numbers that we've discussed today, so you might argue that the after-cost track record in the past is still convincing. But what if PFFA had some bad years? In such a case, you could imagine a scenario where the high costs might start eating into the fund's overall performance. 5. Do you have any issues with the portfolio mix of PFFA? As of May 29, 2026, PFFA's portfolio consisted of 70% financials, mortgage REITs, and real estate. So this may not be for you if you're looking for some steady utility preferreds, for example. Everyone's financial journey is different, but do leave a comment below and let everyone know what are your thoughts on PFFA. Do you own it already, or are you contemplating adding some to your portfolio? And what other ETFs, preferred or otherwise, do you really like right now? Maybe we'll be able to do a deeper dive into the ones that are most interesting in future videos. And as always, if you'd like to continue the conversations and keep sharing perspectives, the best rates and investment ideas with me, Chen, and other like-minded Diamond NestEgg members, I'd like to invite you to join our VIP investment club. Visit our website at www.diamondnestegg.com and click on this yellow Private VIP Investment Club button to join today. You can also find the links below for your convenience. Thanks for watching, and I'll be back.